Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together. I'm going to do the part 2 of the webinar. So part 1, I was doing it between 9 and 9:45 GMT, and part 2 I am doing it on June 17 between 14 and 14:45 GMT. So between 9 and 9:45 GMT during the European session, we have decided based on the live market code page certain trades. So I will explain what happened to those trades, and also I will focus the camera over that of the live market code page and explain to you what happened to that of the highs and the lows set in the majors and also the two commodity pairs and also some of the crosses. Now, after completing it, I will also explain during that US session what sort of trade decisions we can take. So before that, let me focus the camera over that of the live market code page. Now you must be able to see the live market code page. Currently Euro is trading around 1.4304, 1.4306, 1.4128 is the low, 1.4314 is the high. You know that during that of the European session, we have seen 1.4224 as the initial high, and subsequently during the webinar time they breached it, and I anticipated that it could be only a stop end. But subsequently they have not come below that of 1.4224 and stay there for more than 30 minutes. In fact, they made a pump and dump move and quickly gained the levels in the case of Euro. So because of that, Euro went up to that level of 1.4294 and I think 98, and then subsequently it started making the slide towards the close of the European session. And now during that US session, so it started by 13:30 GMT. Before that of 14 GMT, they made the breach of the high. So 1.4298 just breached and formed 1.4314. So this one, we have to see whether it is a real stop end or a continuation of the move. In that case, it can be an intentional move of gaining the levels. That means they have identified a lot of traders having the short positions at the lower level. They want them to do the short covering. So currently, Euro is showing about 97 pips positive net change. In case of GBP, 1.6168 was the initial high, and then subsequently they made another upward stop and formed 1.6186, and currently they just breached that high also and formed 1.6194. Exactly just 1 minute before that of 14 GMT, they made a quick upward stop and now currently staying around that of the initial high 1.6185, 1.6189 level. The low was 1.6095 during the early European session. They made the downward stop and before making a rise. And in the case of yen, we saw that the low was around 80.40 and they breached that low and came down during the gap time and also session start time and during the US session and formed the new low 80.09 and currently trading around 80.18, 80.21. So here you come across the USD weakening move. And during that European session, we have seen that they have been doing the USD gaining move. And now during the start of the US session, they are doing USD weakening move. This is how they change the market perception from session to session and try to make the moves and give some attributes. But if you see carefully, Euro is trying to come below that of the psychological level 1.4243 and now it has come to 1.4296. So if it comes to 1.4298 in the ask level and stay here for about 30 minutes, then it is expected to slide. Then they made a brief upward stop and then they wanted to make the slide for the weekend. You will be able to understand that. And in the case of CHF, during that of the European session, they formed 84.55. I kept a buy order around that 84.58. It was not filled, and subsequently they have not breached the high or the low, and they have been holding it in the middle level. So currently you come across only 3 pips negative net change. And Canadian dollar, they have been hovering around that of 98 and just made a small dip here. And Australian dollar, I took a sell order around 1.0577 and then they stopped me out, and later on I re-entered, I'll show you, and they formed a new high 1.0633, and then subsequently they have not breached this particular high when they made the upward stop in the case of Euro and GBP. So if they are really making a rise in the case of Euro and GBP, normally you find that the commodity pairs lead the rally and lag behind, whereas it has lagged behind, it has not just lead the rally. So it indicates that they have just only done the upward stop in the case of Euro and GBP here. So before explaining with regard to the positions, now they are just in a matter of 10 minutes come down. We'll wait for another 10 minutes to take the positions to confirm whether it is a stop, and so that you will be able to take sell position near that of the high. So I'll go back to that of the PowerPoint presentation and show you what happened to the trades. Now, these are all the positions what I envisaged. I took a sell near that of the initial high 1.4224, and they breached the high and formed about 1.4242, and then I was able to take a sell around 42.30 and then kept 30 pip stops, and that was around 42.60. Then that was stopped out. Once it has stopped out, I accepted a loss of 30 pips. Then I waited for 2 hours because I know that they had done that extended stop, and I am not just immediately enter into the market. And sorry, it should be 42.88. Then I was waiting for 11:30 GMT and took a sell position around 42.88, and they formed subsequently 42.96, and then I kept 30 pip stop. So at any level I can do a sell and buy, because my mindset is I'm just trying to take only 30 pips loss. In case if the position makes profit, then I'll keep first stop at entry and avoid the loss. Then I try to maximize the profit. And so then after filling my sell position again, because I found that it is only an extended stop and extended move, so I took the sell after 1.5 hours completion of the webinar, because during the webinar time only we were able to see that 42.30 and 42.40 levels, and then later on it came down. I kept stop at entry and removed the stop, and subsequently it came down around 12:35 GMT, and I closed it around 42.50 with 38 pips profit. So I made a loss of 30 pips and a profit of 38 pips. So a net profit of 8 pips was seen in this particular trade. Then in the case of GBP, 61.65 I kept a limit order, and at that time 61.68 was the high, and then that got filled, and above that 61.95 was the stop. But the stop was not hit because GBP did not rise that much, and later on it came down. Then immediately before the close of the European session, I closed it around 61.40 with a profit of 25 pips. And in the case of CHF 84.58, I kept near that of below the buy order that was not filled. Then Australian dollar 1.0577 and a stop of 30 pips. Above that 1.0607, and that got stopped out, and I lost 30 pips on that. Afterwards, when it went up to 1.0630, I found that they stopped the momentum and then took a sell position after 2 hours with 30 pips stop. And subsequently they formed 1.0633 as the high, and afterwards started coming down. Then I kept immediately stop at entry 1.0630 and removed the stop and came down to 1.0603. I took a profit of 27 pips. Then in the case of GBP 129.83, I took a position closer to that of the low. The low at that time set was 129.51, and they formed during the gap time a new low 129.44, and now they have come above 129.6774 on the current level. So I was not stopped up, nor I was able to book profit in that position. So I am continuing the position to that of the US session. So during the mid-US session, I will try to close it. Then in the case of Euro GBP, I was telling you that made the upward stop and 88.11 I took a sell position with 50 pip stop, and it went up afterwards because of the rise in the case of Euro to 0.8839, and my stop was 50 pips above. It has not stopped. I am still holding. So these are all the positions I thought of. In the case of yen, I was not taking positions because the spread between the low and the high was very low. Now the spread is improved, and we will review how exactly we can take positions during that of the US session. So here, I wanted to explain the trading strategy. So when I had taken a sell position here, thinking that it was a stop and I told you that my reading can go wrong. And because it is being Friday, they would have noticed that a lot of people are taking the sell positions. So they made an extended move for about 2 hours and hit the stops. So at that time, it is better to stop out, and hence we say that better keep stop at entry once the position makes profit. And that way, if we do it, so we will not be able to become fatigued or upset once we incur a loss. And because I incur a loss, it doesn't mean that I am not good at trading and things like that. I understand that they made a sudden extended move because it was considered as an upward stop, but later on they made an extended move for 2 hours. So calmly waited for 2 hours and took another sell and kept stop at entry once they start coming down. And during the drop, I was able to grab that profit. So at that time, so I should not see whether it will come down to that of the low or keep a buy lower than that of the low, and this sort of thing. I have not done it. I just physically watched in the live market quote page how far they are coming down. Beyond that, they are not going down. So immediately I closed the position with 38 pips profit. So you find that even though I lost it, I was able to earn about 8 pips positive profit. So similarly, in the case of GBP, I was able to close the position because I wanted to close within the session and show it to you that we can do such trades, and it is not that we need to hold it for a long time. And then similarly, in the case of Australian dollar also, they made a quick move, and I was able to accept the loss of 30 pips. And then when it went up, again I know that it is an extended move, that commodity pairs lead the rally and lag behind. So I just took another sell position. Afterwards, they made only a 3 pip rise in that. And when they quickly dropped it, I kept stop at entry to start with so that I don't incur further loss. And then I grabbed the profit. So as a whole, you find that we are able to do the money management. And this money management is very important. And it is not that I wanted to sell around that of the resistance level, around that of the support level I want to buy, and they are all okay, fine. But if you are smart enough, you will be able to capture the swing profits. Now let us see what trades we can do. Before that, let me go to that of the sessions. So I explained to you what happened to the positions, and not much of a profit earned, but at the same time the loss I recovered. Then with regard to the highs and the lows, I showed you that the high they formed is just now by 1 minute before that of 14 GMT, they made an upward stop. And in the case of Euro, they have come to 1.429496, 1.429498 was the high. They just come below that. It is definitely a stop, and they wanted to drop from here. And similarly, in the case of Euro, they went up to 1.6194, but the initial low was 1.6186 after that of the extended move. They come below that. And yen also, they made a downward stop and then gone up a little bit. So let us think of a trade for the European. So before that, let me explain to you the session timings, those who are not very familiar with this. So 0030 to 7 GMT is the Japanese session, then 7 to 7:30 is the gap time. They are all naturally formed gap times, because the banks in certain regions close and the banks in the other regions open, and in between you come across certain the gap time, and this gap time is being used by the other players to make the false move or hit the stops of the traders. And otherwise, if they try to do the stop and during that of the regular session, and there could be the currency conversion from that of the exporters and the importers, and that could get filled with their order. and they do not want to get struck with a high level buy or a lower level sell, so they avoid it, and only during gap time they make that stop loss. Then 7:30 to 13 GMT is the European session. Then 13 to 13:30 is the gap time again before the start of the US session, and 13:30 US session has started. Now we are in 14 GMT. The session will last till 20:30 GMT. Afterwards you have about 4 hours of gap time, during which time you know that normally they either make a big upward move or a big downward move and open differently during the next day. And with regard to the trading, we follow the GMT time for the trading so that you will be able to participate in 24 hours of the market. And first 1.5 hours will be the session start time. The last 1.5 hours will be the late session time, and the rest of the time will be the mid session in each of the Japanese, European and US session. So live market quote page is the only tool we use to identify the tick by tick moves of the players, and if you use it in the chart, the tick chart will become unwieldy. We will not be able to read anything. So instead we use the live market quote page. Straight away we'll be able to see their price action and try to understand what they are trying to do it. Then also we refer to that of the net change and always relate the market to that of the high, low and the net change. When they are near that of the high and not breach the high, then we try to take a sell position in first 30 minutes from the start of the session. And exactly by 1 minute short of 14 GMT, they made an upward stop and quickly they are making a dip in the case of Euro and GBP. So next firming up move, we will try to take. And don't think that they will straight away drop. They will do pump and dump move and just build the sell positions. Afterwards only they will drop it. So they are not in a hurry, and they know very well there are a lot of short sellers. They will, in the US session, they will come for the short covering, and also towards close, the higher level long holders will come for liquidation of the long position when the market is not further rising. So this is how they handle the market, so that from every trader when they book loss, they are able to book profit. So you identify a currency wherein you find more than 40 to 50 pips spread between the low and the high, and those currencies, if you try to take positions, you will be able to earn about 30-40 pips profit, because they are bound to make swings there. If it is less than that of 50 pips or 40 pips, then you will find subdued moves will be there, and if you take a position, you may hardly take about 10 to 15 pips profit. Otherwise, they may just make a wider range swing in order to trap the traders on the upside and the downside. So we may not be able to participate in that and earn money. Then entry, we always decide when the market is near that of the high, we try to take a sell position. When the market is near the low, we try to take a buy position when it has not breached it. Breach the high or the low in the first 30 minutes. And after taking that, we don't simply say that this is the thumb rule, so we will not take any trading strategy, but we keep 30 pips stop, because we know at any given time the market can suddenly give an unexpected move against us. So we do not want to take an unlimited risk, so we will limit the risk to 30 pips. And once the position makes profit, we will keep stop at entry, about 20 to 25 pips profit. We will keep stop at entry and remove the stop, which is kept 30 pips away from that of the original position. And thereby we don't lose any money in the trade. Subsequently, we decide about the entry. The entry will be initially near that of the low. And if they have made an extended stop, then we will try to keep their entry near that of the initial high. And in case if they are just formed only, they came up to that of the high, and right from Japanese session the high has not been breached, then we will try to keep the stop or entry near that of the low. Today's low in the case of Euro is 1.4228, but the initial low was 1.4224, so we will try to keep a entry limit there. And in case if the going is good, when they started dropping big way, we just move the limit to the lower level to 1.4128 and trail the stop in the profit making position. This is the way we try to maximize the profit. So we take very less position and try to maximize the profit. So we don't, in an impulsive way, jump into that of the market unless and otherwise it breaches the initial high and stay above there for more than 30 minutes. We do a buy and sell trade above that of the high, or a sell and buy trade below that of the low, and try to keep stop as quickly as possible at entry, because they are all considered as a technical trade and suddenly the market can reverse, so we don't take chance with that. Then in the event, if it is breached the initial high or the low, then identify the type of move, whether it is a stop and above that for this new session, or it is a false move going up to that of the high and come down, or it is an extended move. Again, they are going above that of the initial high. Then in that case, it becomes second time if they make an extended move, because it is more than 2 hours. An extended move is only for 2 hours, and if it is an intentional move, it is for 2 sessions. And the third session also, they will just show the move and then reverse. So we have seen an extended move in the case of Euro during that of the European session, whereas just a stop and above that of the high in the case of GBP. And we have not seen the intentional move. Now we will see whether they are coming below that of the stay below that of the recent high 1.4298 for more than 30 minutes. Then we'll try to take the sell position in the case of Euro and sell position in the case of GBP. So just because they gain the levels, it doesn't mean that immediately they are going to continuously rise indefinitely, because ultimately the players quickly gain the levels, which indicated from that of the low, they quickly gain the levels, quick moves or false moves in the market. And on Wednesday, they made a very big drop as a pullback. They had just done it on a Friday in order to attract all those who had taken the sell positions on Tuesday and Wednesday to keep the buy orders, and later on drop the market. But still at the same time, those who had taken the long positions on Wednesday and Thursday, they try to avoid giving profit. And this is the way, very cleverly, they handle the market. So on either side, they earn from that of the market. So if it is an extended move, we wait for 2 hours afterwards, we enter into the market, and just whether on the same direction or a counter trade, we do it. If we identify early, if it is the initial high, they cut it, then we'll try to turn long above that of the high, or try to turn short below that of the low, initial low. But now we are doing it only with regard to European and US session. So this I am not applying. I am just taking into consideration only the recent high, so that you will be able to easily follow it using the live market code page. Then in case if I have taken a sell position in the extended rise time, and you need not become perturbed, and you can simply keep stop at entry and wait, the next day they will make that intentional move as a continuation of the move, and that will be a downward move for 2 sessions, and you can just grab the profit. There is no uncertainty with regard to this. If you watch carefully the continuation of the move, they do a stop and a false move, extended move and the intentional move. Only during that of the trend reversal time, they make an extended stop and rise about 100-150 pips and drop it in a matter of about 30 minutes to 1 hour. That sort of moves they do it. So already you find that they are just building sell positions in the case of Euro and GBP. Now, in the US session, Euro and GBP are expected to swing near that of the high and slide for the weekend. This is the forecast. So anyhow, we have just done the study also. Now we will take the positions in the case of European session. So Euro is currently trading around 42.83, 42.85. It has come below that of 42.98 and made an upward stop, and that is a good strategy to take sell position. Doesn't matter. Let us do a safe trade. So we will keep 10 pips above that of the current level, a sell order. In case if they don't fill it in a matter of over 10 to 30 minutes, we will modify and take market level positions. So I am keeping a sell order at 42.93 with 30 pips stop. Now current level is 1.4283, so just 10 pips above. I kept the order and see whether it is getting filled. And if you see the net change, that also gives the insight for it. You find in the case of Euro, it is about 79 pips positive net change, and in the case of GBP, just 4 pips positive net change. So they are not going to make an extended rise of about 150 pips in the case of GBP, and so there might be a doubt whether they are making about 150 pips rise in the case of Euro. And how you can identify that they are not going to rise it? Because they are done about 75 pips now, and 77 pips is a positive net change in the case of the euro, and you don't come across overall bullishness in the market. Euro is showing only about 1 pip positive net change, and yen is showing about 4 pips, 47 pips negative net change, and CHF is showing about 3 pips positive net change. When euro is showing positive net change, CHF is also showing positive net change, and also Canadian dollar and Australian dollar are showing positive net change. They are all contrarian moves. Whenever they make contrarian moves, they don't make the permissible limit move. So we can try to take a sell position near that of the high. In the case of GBP, now it is trading around 61.57. So if you are a smart trader, then during such quick upward move, quick moves or false move, we could have taken a sell position there. But anyhow, I want to explain the concept. I do not want you to be impulsive. Understand the concept well. Then next time when you trade, you will be able to trade wisely. Then GBP, currently it is trading around 61.53. So I keep 10 pips above with a stop. See whether it is getting filled. So CHF I kept near that of the lower buy order, but currently it is trading in the middle level, so there is no point in taking a position. Yen, they formed the low 80.09 and they stopped cutting the low for more than 30 minutes in our observation. During the gap time they formed, so we will take a buy position. 80.18. Now the spread in the case of yen has become more than 50 pips. So we don't mind taking a position. 80.18 we are taking a position and stop 30 pips. Then Australian dollar, it has dropped already, and so the high was 1.0633 and they have come to 1.06, so we will not chase and sell. Then Canadian dollar 0.9816, the current level. Then it is again in the middle level, so we will not take a position. Now in the case of GBP, I have already a buy position. So I'll show it to you. Okay. 129.83 with 50 pip stop. So same position I am trying to carry it to that of the US session. So 129.83 with stop of 50 pips. Currently GBP is trading and GBBN is trading around 129.51. That is the initial high, low what we have seen during that of the European session. From there they just made about 7 pips dip, a downward stop and then went up. Then in the case of Euro Yen, now if you see, it has made only a 7 pips dip, but it is in the middle level again. 114.79 is a high, 114.46 is the current level, 113.74 is the low. So it is not near the low, we will not take it. Euro GBP, I have already a position 0.8811 with a stop of 50 pips. So that is not being still closed, so I am just trying to carry it to that of the US session. So these are all positions. Now Euro CHF. Euro CHF, they are trying to do the contrarian move. Euro is making an upward move and CHF is also making an upward move, showing positive net change. So Euro CHF is currently trading around 1.2108, 1.2111, 1.1985 is the low, 1.21338 is the high. So it is again in the middle level. But they have shown already 72 pips positive net change in the case of Euro CHF. Since they are doing the contrarian move, we can, if you are interested, you can take a buy position there. So they are expected to make hold this contrarian move for some time and then later on gain the levels in the case of CHF, even though when they wanted to drop Euro. So now Euro, they are just making a firming up. So you can understand that it doesn't mean that we have to take the position of the market. We can just keep 10 pips away from that of the market and see how far they are making the move. If it had taken a sell, it would have been around 42.73 and they made a small dip and now it has come to about 42.82. I kept 42.93 as the sell limit order. So when they show green order and continuously show green order, and I just modify this in case if they don't hit it, I'll try to modify to 92.87 or 92.92 and then try to close the position. Try to take the position. So this is how we have to fine tune. There is no hurry in taking the position, and later on thinking that I could have waited for another 10 minutes, I would have got a better entry. So always we try to spend more time in watching the market. Probably we keep the order, and we got convinced that they made an upward stop and come below that of the high what they have set during that of the European session. So they are holding it around 42.80, so 42.93 we are trying to keep it, but still our reading may go wrong, so we keep 30 pip stop. So this is how our trading decisions are being done. Now I will show again the live market code page and explain to you. Meanwhile, I will take up the questions which are asked, so that we will continue monitoring the live market code page, so that you will be able to understand how that monitoring has to be done. So when you are using the live market code page, there is no need that you have to watch it continuously for 24 hours. You can just watch the live market code page just once in 10 minutes, and during the early session, during the mid session, probably just once in 30 minutes you can watch it, because they might be making a subdued move in case they are not breached the high or the low. And in case if they breach the high, then watch after 2 hours where they have set it, and you know that they are making an extended move, quick moves or false move in the market, and try to take a sell position. So it is not that I am trying to trade against that of the market. Actually, I know the quick moves the players do it in order to gain the levels without making much of a buy. So why they are gaining the levels? To hold high and distribute the positions. So at that time, when they start distributing the positions, I'll try to take a sell. They might do a stop and a gain, and in that case I'll stop out and re-enter. So that way, if I try to take a sell position near that of the high, then when they start sliding it, after building the sell position, when all the traders come for the short covering and turn long because of their gain and feel bullish because from the low it has already gained so much, immediately people will think that it might go up further and do that in a hurry, a short covering. Then later on, they also turn long in order to earn back that last money. Then the players drop and earn from them again and again and again. That's what every time you come across in the market. Then the traders say, if I turn long, the market drops. When I turn short, the market goes up. That means we are trying to take impulsively the positions without judging what the other man is trying to do behind the market. So let me take up the questions. Okay, Chris. Is there a way you estimate how many long and short holders there are in the market in order to better judge which direction you think the market will go? Now, it is extremely impossible for anybody to judge visualizing the quote and also even the charts or RSI or whatever it is, or even if you get the quotes information from that of the trading platforms, because there are various types of trades happening in the market. You might be thinking that people are all trying to trade the leverage condition. So you know that there are traders who take that positions in the market, either a buy or a sell, using the leverage. So their leverage can vary as 50 pips or 1:50 or 1:100, 1:200, 1:400. Okay, there are various types of traders taking the different leverage and taking positions. Besides, you come across the futures and options market. There again, the traders are taking buy as well as sell positions. Besides, you come across the currency conversion traders, and they convert the currency from one currency to another currency, wait for a long time and try to convert back. And so you find a different type of traders. And there are traders using the stop to limit the risk, and there are traders who do the currency conversion. There is no need for keeping a stop because they are all actually taking positions without any leverage. So there is no need to close the positions. So such trades are also there. So the players have to definitely see that they try to earn from such traders, all type of traders from time to time. And so nobody will take billions of dollar risk on a daily basis. And suppose if you are trying to trade in an online trading platform, if you are new to that of trading, probably you will open about $500 account or $1,000 account and see the going, how the going is. And you try to learn about it, and later on, if you are able to be successful, then you increase the equity. So that is a normal scenario. Can any high net worth individuals just open $10 billion account and just to speculate on it? They will not. So what is the only way? They have to make decisive moves in the market. So they have to get all the inside information and see that all the traders are short. So let me rise the market so that definitely they have to come for the short cover so that my million can become billion. And they will not just keep that $1 billion in stake. Okay, so that is the reason that you come across the market is making decisive moves. But the only advantage for us is whatever the hidden agenda of the players, they have to show it in the market in the form of the type of moves. As I explained earlier, that they have to first of all make a cunning move. See, now they are firming it up in the case of euro. So they have to make first of all a cunning move, and the first move will be the cunning move, then subsequently they will make that the expected move. So if you follow the cunning move, then we know what they are trying to do it. That extent of rise or a fall depends upon the people who come for the short covering. Because we don't have that people who are in short and when they will come for short covering. So that information nobody will be able to tell. So the players just gain the levels and see whether they are coming for the short covering. If they are not coming it, they make one more rise so that the margin pressure comes into the traders. If they are not used the stop, then they come for one more short covering. And turn long. And again, the banks have got the limitation. They cannot make indefinite rise or indefinite drops. So they have the limitations, and based within the limitation, they try to move the market and try to earn. So this is how you come across the market is making the moves. So now my euro position is filled. Okay. Now I kept the camera over that of the live market quote page. Hope you should be able to see that. Then Rami. Is the intentional move opposite to that of the extended move? Yes, it will be opposite to that of the extended. Extended move is a quick move in order to gain the levels or lose the levels without taking much of a position. So during the drop, they don't sell much, but they drop it in such a way, they keep the orders, buy orders, 50 pips lower, and just fill it. Immediately the market will jump down 50 pips. And nobody would have kept 100 pips below the orders. You know very well, when the market is currently trading around 1.4296, probably 20 pips, 30 pips below, there will be cluster of orders or above cluster of orders. But nobody will keep a buy order at 1.41 now. Probably sporadically somebody would have kept it, but not otherwise. So they know very well if you want to drop quickly, they simply take it and keep another buy order at 1.4178, they fill it and market jumps down. Then immediately we think that our order is not filled when I kept it around 42.20 or 42.30 in the trading platform, because they just use a specific type of order and fill it so that our intermediary order will not be filled. So that is why the platform providers say that during that of the data release time, if our order is not filled or a stop is not filled, we cannot guarantee or we cannot take the responsibility. That is the main reason, because they have got specific strategies to earn from that of the traders. So they are all decisive moves, so they will continue to earn and share with so many people. We cannot stop it. Then bazaar. Why take a position in GBP when it is in a middle level? So I have not taken it middle level, I just kept it around that of 61, 68. That was the initial high, and they went up to 20 pips above and then came down. So 10 pips above the market, I kept a buy order. So now my GBP position, I'll go back to that of the PowerPoint presentation so that I'll be able to show you. So 42.93 that got filled. So, sorry, it was a limit order, now it has become a position. Then 61.63 has become a position. Then I got the stop to limit it. I kept 10 pip above the market. So sometimes they may go up to 67 or 65. I want to have a definite fill, and also you are only looking at the live market quote page. Sometimes the platform may not show the similar orders, the similar levels. So some platform might be showing 1 or 2 pips lower than that of the market. Some platform might show higher than that of the market. Similarly, whatever the initial highs, whatever the high and the low, what you see in the live market quote page, the platform might show a different one because they do the local stop. And also, besides the players, the platform providers also try to earn from their own clients by making stop ins. So you have to understand that. So this N position is there, is making about 3 pips loss, and GBPN, it is around 30 pips loss, and Euro GBP currently it is just making one more gain because they are making a small swing here. I'll wait for them to make the profit and try to keep stop at entry and try to convert. And I'll keep the camera over there at the live market quote page again and continue answering to the questions. Then Matthew, will there be Monday false move? Yes. Now they gained the levels on Friday and they are holding it now for the time being. They will slowly drop and gain, and that sort of moves they could do it. And in the case of GBP, they could come down. I mean, Euro, they could come to that level of 1.4220 area or around 1.42 area and then make the week beginning false move on Monday. So Monday, they are expected to just open slightly above that of the Friday close and start making the slide. And the European session, they are expected to make initially some gains, and Monday US session will be able to see a drop. Then Monday and Tuesday, they could be making the week beginning false move on the downside. Then from Wednesday onwards, they are expected to make again upward move. So we will not come across that the Euro and GBP falling in a very big way continuously. Only next month it is expected to fall. So till such time, the players will try to hold at the intermediary level and build a sell position. So now if you see that they went up to 1.49, then afterwards they build a sell position at 1.46, then they build a sell position at 1.44 to 1.4479. Then now they are trying to build the sell positions around 42.50 to 42.90 and 43 area. Then they will drop and build sell positions around 40. Then you will find they are expected to make a downward move and a downward stop. And so we do not know how far they will drop it during the month of July. And you might think that is a Greece problem as a Portugal problem. They can highlight any problem whichever the way they wanted to take the move. Sometimes they can create the problem and act against the traders. When the traders become bearish, they quickly gain the levels. So last week, you know that when everybody was talking about Greece problem, they took Euro to 1.44. That is how they can do it. Matthew, will there be, yeah, that's what I explained. Vinay, why did you take a sell position in GBP even though it is not, yeah, that's what I explained, because just about 10 pips above the market. I was not able to take immediately around 14 GMT, 14.10 GMT because I was explaining to you. So whatever the level I come across from there, see, entering in any level is fine for me as long as my position makes profit. And also my stop, which is about 30 pips, an optimal stop, that should not be filled as far as possible. I will not take just like that risk any level as sell and keep 30 pips. See that my stop is not filled relatively. And in extreme condition it can be filled, but relatively I will see that it is a safe trade. So that I will be able to keep stop at entry and continue earning from the other positions. Because we all come to the market only to earn money, not to just glorify Euro or glorify GBP and things like that. Will Australian dollar revisit 1.05? Yes, very much is, and they will drop it again. Now they are holding around 1.06, and they took it up to 1.07, and then from there they dropped it to 1.05 area and a downward stop, and then took it to 1.06. And here they will build the sell position and drop it to 1.05 and then 1.03 and come to 1.04 and build a sell position. And next month you will come across Australian dollar trading below parity. Not that I am so confident and things like that. This is how the algorithm says. So don't think that I am making overconfidence estimate, etc. I am just explaining what my algorithm says. It can be wrong also. And Roni, how can we confirm it is not a trend reversal? Trend reversals are seen only during that of the month end and month beginning time, not intermediary level, excepting certain occasions. Whenever they do the multi-year levels, then only they do the intermediary trend reversal. Otherwise, month end and month beginning times only they do the trend reversals. Then yarn. I am still holding euro 1.4230 hedged. Yeah, fine. You can use the hedge and try to keep stop at entry and see that how far they are rising in the case of euro. And you can trail the stop and close it. In case you do not want to book profit on the upside, you can simply wait with the stop at entry. There are so many ways of trading it. Now, in case if euro goes above 1.4314, then you can simply close the sell position with a loss, and the buy position will be having 30 pips short of that particular loss as a profit. And if the market goes 30 pips above, you will have a break even. So at any time you can just close the sell position or the buy position. That is the advantage of the hedging. Otherwise, you can simply hold the sell position and just book profit when they are not breaching the new high. In your 30 minutes to 2 hours of observation, you can try to close it near that, and afterwards keep another hedging order to limit the risk above the market. When they start coming down, you can take another sell and keep stop at entry and close both the sell positions below their average. That is either way trading. So there are various trading opportunities available if you try to use hedging. I explained it in my trading system, what are the type of trades you can do it using the hedging. If you could go through that, you will be able to understand. Then must. What you are saying is really we move the market, all harmonic patterns, supply, demand, supply indications, etc. are illusions. No, they are not illusions. They are all the ways statistically we can identify what the market is trying to do. But unfortunately, the similar indications or indicators the players use, they have appointed several analysts and asked them to give such analysis and try to see how exactly the traders have followed and taken the positions and try to act against such traders. So what is the big deal in following it if you are not going to make successful trade? That is my only question. Basically, I am a statistics professor because I respect statistics. But unfortunately, the players also use the same statistics and they act against the traders. So in what way that statistics can tell what the player has got the hidden agenda, what the player is trying to do? That is the biggest problem. And Milo, majors 30 pips stop and crosses 50 pips. Do you consider lower than these? Yeah, we can tighten the stop also. We can tighten the stops to 10 pips, 15 pips, or even keep stop at entry. But ideal is 30 pips. And Chris, do the players get in and out each session or day, or do they also make as many longer positions trades per week? They do it for the years. So, as far as the players are concerned, they try to do currency conversion trade to start with. See, you know that the big moves, what they are doing, they are all nothing but the currency conversions. So nobody will be able to sell euro at 1.44 and drop it to 1.40, just like that, in a speculative way, unless and otherwise you do a decisive trading. So they do the currency conversion trade, and also they do the leverage trades along with the other in the market. So They have the long-term positions, short-term positions, and also intraday positions, and they do it, and they do the circular trades. So one of the account will be holding long position, another account will be holding short positions. That's how they handle it. So I cannot tell you openly beyond that. Then ask you, can you say again what you expect for the Japanese and European session on Monday? They are expected to make fairly a flat opening or slightly higher and then start making the drop, make a brief upward stop and then drop during the session on Monday. And the European session, they are expected to, early European session, they are expected to make a rise and then drop during late European session and the US session. That's what I said. I'll display anyhow in the blog for that. Then Charan, can you explain the stop end about the high, low and not broken or broken? If you ask a general question like this, I don't understand. Stop end is a move which happens in less than 30 minutes and they go above that of the initial high and hit and form a new high and come below that of the earlier high in less than 30 minutes. It is stop end. And if they take about 2 hours, then it is an extended move, going above or going below an RK. Can you expect GBP to fall below 1.60 or before 1.70? It's such a rational question. So they are not expected to go to 1.70 suddenly. They are expected to come down a little bit and probably they may just briefly touch 1.60 and then start gaining the levels, probably before that of Euro gaining level next month. 80. What is the view of Euro USD? Euro USD, they are expected to make still downward move, and you know that people talk about the Greece prices, etc. But when the traders take sell positions based on the fundamentals, they so technically Euro can go up. Then people think that okay, we can do buy and sell trade technically following the Euro move. They say fundamental is weak and drop the market. So you won't be knowing whether the market is going to follow technical at a given time or a fundamental at a given time. That is the biggest confusion for the traders. Do you think that Euro will drop today? I am envisaging. So that is why I taken a sell position. But if it goes against also, I got to stop to limit my position risk. Then Sundar, Euro has been holding high for more than 2 hours in the intention. No, it has not been moving around for more than 1.4298. They came down below in 30 minutes and now they have come to 1.43. But in the case of GBP, they are not breached. In the case of Australian dollar, they are not breached. Only in the case of Euro, they are trying to make higher move just to create the feel in the market. We will know about it later on during the day, whether they want to really rise or they are just create the feel and confuse the traders or just induce the short sellers to do the short covering and later on drop it. See, if I taken a buy anywhere here, I will not be able to book profit. I can earn about 10 to 15 pips, but they are just making about a move of this nature for nearly about 1 hour just to give that feel, bullish feel to the traders. But actually, if I take a buy position, I have to wait for a long time to take a profit. Easy. Do you use any technical indicators at all your focus? I was using it. I stopped because what you come across, most of the technical analysts using it. Beyond that, I used various other type of technical analysis also on the indicators. I tried various methods using sophisticated technical analysis, but still they are not worked perfectly. And later on, I spent all my time in developing this algorithm to find out why the people are losing money when they are following technicals and fundamentals and things like that. Why 95% of the traders are losing money? Is it something wrong with the technical, or the technicals are not giving the right direction of the market? So when I was questioning it myself, and I thought that being a statistics professor, so I should try to find a solution to that. And that is how I gone into this particular aspect of research. Then, Ritan, can you please explain about parity? Well, parity is nothing but when a currency is trading at par, it is referred as parity. So, Euro CHF, people are afraid when it has come to 1.09, it could come to 1. That is referred as parity. Then do you expect euro to challenge 1.49 again? Not immediately, sir. Probably we'll come across by late August or September, not immediately. So let me go back to that of the PowerPoint presentation. So I don't have much time because there is going to be another webinar. So these are all the positions. 1.4293, it's slightly making a loss, and GBP is also slightly making a loss. The stop is not being hit, and yen also nominal loss, and GBBN again about 20-30 pips. Still they are not breached the low, so there's no harm. They will be able to drop it, and Euro GBP again about 30 pips above that of my sell position, which I carry from that of the European session, but I limit the risk by keeping 50 pip stop. In case if they stopped me out, I'll watch and re-enter into the market. So I don't immediately shift my decision and turn long. So there comes the biggest challenge, because most of the traders, they do the short covering and turn long, then only they lose money in the market. But if they continue to play in that market in the same direction, understanding that the players are really gaining the levels, that you have to identify the speed of the moves. That is, quick moves, if they make it, they are only quickly gaining the level to drop it only or sell. So let me sell along with them next time. So that is how we have to take a decision on that. So I take this opportunity to thank FX Trade for the kind opportunity in presenting the Tracking the Forex Market webinar. Part 1 and Part 2 every month for nearly about 4-5 years I have been doing it. So every time I want to bring in new concepts. So this time around I wanted to emphasize more on explaining how the live market quote page can be effectively studied or used as a single tool for understanding the player's intentions. And I take this opportunity to thank everyone who has come here to listen to my webinar, and kindly find there might be some mistakes in my analysis or understanding, and try to find whichever is useful for you and incorporate it along with your system and try to develop, because this is not the end of science, and somebody should take it up further as a torchbearer and try to find how exactly we can read other man's mind, and that is a real challenge for the forex market. Thank you one and all. See you on Monday during the next webinar, Asian Session Live Market Analysis. Thank you one and all.